Ladies and gentlemen, good day, and welcome to the earnings conference call for the quarter and year ended 31st March 2026 of STARCEMENT, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited for opening remarks. Thank you, and over to you.
Yeah, thank you, Ryan. Good evening, everyone. Sincere apologies for the delay due to some connection issues. On behalf of PhillipCapital India Private Limited, we welcome you to the Q4 and FY26 call of STARCEMENT Limited. On the call, we have with us Mr. Tushar Bhajanka, Deputy Managing Director, and Mr. Manoj Agarwal, Chief Finance Officer at STARCEMENT Limited. I would like to mention on behalf of STARCEMENT Limited and its management that certain statements that may be made or discussed on today's conference call may be forward-looking statements related to future business developments and anticipated company outcomes by its management. Such statements stated on today's call would be based on STARCEMENT's current management expectations, and these statements are subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. STARCEMENT Limited and the management of the company assumes no obligation to publicly update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to the management of STARCEMENT for the opening remarks, which will be followed by interactive Q&A. Thank you, and over to you.
Yes. Tushar.
Hello. Yeah, hi. Hi, good afternoon, everyone. My name is Tushar Bhajanka, and I'm the MD of STARCEMENT. I welcome you all to the conference call of FY26 quarter 4. I would like our CFO, Mr. Manoj Agarwal, to give his remarks regarding the numbers, and then we can start with the Q&A.
Yeah. Thank you. Hi, friends. Very good afternoon. I, on behalf of STARCEMENT Limited, welcome you to our con call for discussing our number of Q4 ending FY26 and for the financial year 26-27. Now, I will just take you through the Q4 number followed by the financial year numbers. Starting from clinker production, during the quarter ended March 2026, we have produced 11.59 lakh ton of clinker as against 11.38 lakh ton same quarter last year. So far as cement production is concerned, we have produced 16.45 lakh ton this quarter as against 14.79 lakh ton same quarter last year. Now I will take you through sales volume. During the quarter, we have sold 16.18 lakh ton of cement and 1.15 lakh ton of clinker as against 14.75 lakh ton of cement and 0.57 lakh ton of clinker in same period last year. This is as far as cement and clinker sale is concerned. As far as geographical distribution of cement is concerned, in Northeast we have sold around 11.27 lakh ton as against 11.02 lakh ton during same quarter last year. And as far as outside Northeast sale is concerned, we have sold 4.91 lakh ton of cement this quarter as against 3.74 lakh ton same quarter last year. In terms of blend mix, it is 18% of OPC and rest is PPC. These are the quantitative number of the quarter. Now I will take you through to the financials. The total revenue figure for this quarter is around 1174 crore as against 1052 crore same period last year. As far as EBITDA figure is concerned, this quarter we have done an EBITDA excluding exceptional item, it is around 324 crore as against 268 crore last year. Profit after tax is 147 crore as against 122 crore in the same period last year. On per ton EBITDA front, it is 1871 during this quarter as against 1748 per ton same quarter last year. This is what our quarterly number of this fourth quarter. The total revenue figure for full year is around 3,776 crore as against 3,163 crore in last year FY25. As far as EBITDA figure is concerned, during FY26, we have done an EBITDA excluding exceptional items of around rupees 955 crore as against rupees 589 crore last year. Full year profit after tax is 390 crore as against 169 crore last year. On per ton EBITDA front, it is 1738 during FY26 as against 12.45 per ton in FY25. These are the quarterly and full-time numbers. Now, I request all of you, if you have any query, you can ask the same, and I will request Vaibhav to moderate the same wherever required. Thank you. Vaibhav, now it's over to you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Harsh Mittal from Emkay Global Financial Services. Please go ahead.
Yeah, thank you. Good evening, sir. So I have multiple questions today, and firstly, congratulations on a great set of results. The first question is on the volume. So for FY26, so the upper end of your 5.5 million tons. Any guidance?
Harsh, I'm sorry to interrupt you, but your audio is not clear. Could you please use your handset?
Just a moment. Hello? Hello?
Harsh?
Hello?
Harsh, I would request you to please join back the queue once your audio is clear.
Hello. Am I audible now?
Yes, now you are. Please go ahead.
Yes. So, congratulations to the team for a great set of results. I have multiple questions today. My first question is on the volumes. So we have achieved the upper end of the guidance which we have given last year of 5.5 million ton in FY26. Any fresh guidance for any new guidance for FY27, sir? You're mute.
Sorry. What we are looking for in the coming year is about 10 to 12% growth. So I think that is what we are expecting. So I think it should be, the volume that we did, which is about 5.3, and 10 to 12% growth on that.
So, and how is the current demand scenario in April and in May? Is it supportive of the run rate? Or, I know it's too early, but how is the current scenario, sir?
So the current scenario right now, because of April, and there was elections, in April and May.
Yeah.
And Assam and also West Bengal. So I think the demand was a bit sluggish because of that. I think we do see a pickup in May. April was a bit sluggish.
Okay.
So it's like what you said, I think it's too soon to probably predict how the year would go. And it really depends on how June also goes, right? So I think we'll probably be able to give a better estimate of how the overall numbers will turn up in the next quarter, once we've seen 4-5 months, I guess.
Sure, sir. So the second question is on the incentives. So we did see certain reduction in the incentive for Q3 and Q4 given the cut in the GST rates. Can we extrapolate the Q4 incentive accrual for full year FY27?
So I think the overall subsidies in FY27 would reduce by about 40 to 50 CR compared to compared to FY26, right? So I think on an absolute level, that's what we can expect. And then, it will of course have its own per ton EBITDA impact on profitability.
So in absolute numbers, can we say around 160 to 170 crores in FY27?
No, current year we have done 184 crore of subsidy. So what Kali is saying, 40 to 50 crore, somewhere with 144, 145 to 150 crore sort of thing you can estimate for the coming year.
140 to 150 crores. Am I right?
Yeah.
Also, sir, are we sticking to our capex guidance of 500 to 600 crores in FY27 and 1,000 crores in FY28? Or is there any upside risk to this, given that we want to commission?
Yeah. So I think Right now, what we're doing is that we we've applied for our ECs and all the permissions, and we're acquiring land right now in Nimbol, in Haryana for a grinding unit, and also in Bihar for a grinding unit. So I think in October around, we should be we should be able to complete our approvals as well as the land acquisition in these three places, and then we will start our capex. So I think the estimate for FY27 will be about 600 to 700 crores, given we follow these timelines.
And in FY28, sir?
In FY28, I think the estimate would be about 1,500 crores.
1,500 crores. Right. Okay. Sir, last question before I fall back in the queue. We have seen an increase of 240 crores odd in the non-current investments. So what could that number be?
That was because the bond, this is the liquid asset itself, but as per the Ind AS, we have to show it as a non-current asset. But these are all the liquid assets less than 1 year, realizable for less than 1 year.
Okay. Got it, sir. Thank you. I'll fall back in the queue. Thank you.
Thank you. Participants, please press star and 1 to ask a question. We take the next question from the line of Hardik Goyal from Union Mutual Fund. Please go ahead.
Hi, sir. Thanks for this opportunity and congrats on good set of results. I have a couple of questions. So firstly...
Hardik, I'm sorry to interrupt you there.
Hello, is it better now? Hello?
Yes, Hardik, please go ahead.
Yeah. So, sir, on the cost front, we have seen that there's an industry-wide impact of increasing fuel costs. But how immune are we to the increasing fuel costs due to our agreement of coal purchase with Coal India and less dependency on petcoke and other prices?
So I think right now, in Q1, we would see an increase in the fuel cost. I think that is mainly because I think it's both. I think the cost increase in the fuel and also the shortage, right? Because all the rakes right now, from the railways has been diverted to the power plants, right? Thermal plants. So I think the availability of coal is in short supply, and I think that is leading to the increase in the price of coal as well. So I think there would be an impact of, I think, about 10 to 15 paisa per GCV cost in coal. I think that should be a short-term increase. I don't think it should be a long-term structural increase, but there will be increase because of all the rakes being diverted, and then we have to arrange coal from elsewhere, and then that increases the cost. But that should be probably Q1, Q2, and then I think it should again come back to where it was in Q3, Q4 onwards.
Also, on your expansion, and what is the priority right now in the Bihar, Nimbol, and Haryana? And for the Bihar unit, what is our expected timeline? And will we source the clinker from the Meghalaya unit only for the Bihar plant?
Yes. So I think our timeline for the Bihar plant is roughly about 2 years from now. This includes the land acquisition and then putting up the greenfield. The clinker would be going from Meghalaya itself. What we are planning to do is that we have a filter unit which also has a railway siding, which is about 67 kilometers away from our clinker plant. We will send the clinker to the filter railway siding, and we'll load our clinker from there, and we'll send it to Bihar. So that's how we have planned the entire logistics around it. And initially, definitely, till time we don't have any opportunity of putting up a clinker plant in East, Bihar grinding unit will be served from Meghalaya.
Thank you.
Thank you.
Thank you. Participants, please press star and 1 to ask a question. We take the next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. A couple of questions, sir. When we say 10 to 12% volume growth, so this is on pure cement we are talking and not including the clinker.
Yeah, the estimate that I was suggesting of 10 to 12 was mainly on cement. It did not include the sales of clinker.
So clinker sale broadly would be the similar 3.5 lakh that we have done in FY26. The similar run rate will continue?
I, I don't have necessarily a good estimate of that. Probably it should be similar numbers, but it should be quite flattish. I don't think we'll see a growth in the sale of clinker. What we are now focusing on is basically sale of cement only. And we're just trying to make sure that we realize a better rate in clinker. So rather than on the volume of clinker, I think what we're trying to optimize is on the on the realization that we're getting by selling clinker.
Okay. Three data points are trade share, CC ratio, lead distance, and kcal cost for fourth quarter.
Okay, so trade share is about 78%. Last year, same quarter, it was 81%. So there was growth in non-trade as compared to trade, relatively. Then I think the second thing you had asked for was the lead distance, right? So which has reduced from 229 last year to right now about 220. It has reduced by about 9 kilometers. The third thing you had asked for a kcal cost, right? Which is about 1.24 rupees per GCV. And what was the fourth thing that you had asked?
CC ratio for fourth quarter.
Okay, CC ratio for the fourth quarter is about 66.2%.
Okay. So, and another just to clarify, so broadly now the three upcoming plants, the Rajasthan one, Nimbol, and the Bihar one and Umrangso. So we were looking at close to 6 million ton clinker, 9 million ton cement. So and 4,800 crore overall capex, and this broadly will be starting by H2 FY29 to start of FY30. So, and just in the previous answer, you said that the Bihar grinding, which would be, I think, 2 million ton, would be coming 2 years from now. So, shall it mean by FY28 or maybe Q1, Q2 FY29?
Yeah, so I think it means like first quarter of FY29 or second quarter of FY29. Right, so around that time we should be getting the Bihar grinding unit. And we have what we have done is that we prioritize Nimbol, Haryana and Bihar first. And then we've also, of course, applied for permissions and everything in Umrangso and in Gujarat. And, and that capex will start a bit later than this capex. And in the next 4 to 5 years, I think we plan to do all these 5 capexes, which includes Nimbol clinker plant. It includes Umrangso clinker plant in Assam. It includes a grinding unit in Gujarat. It includes a grinding unit in Bihar, and it includes a grinding unit in Haryana.
Yeah. So for Rajasthan particularly, so broader, whatever we discussed last time, the 3 million ton clinker and 5 million ton both, including the split grinding, and the 2,400 for 2,500 crore capex plus 10% variation. And so that number remains intact, and broadly we were looking at to kind of start by September 28. So similar kind of a 1H29, the same way we are. So both would be coming together. That's the way we are looking at it.
Yes, I mean that's the target, but it just depends on when we get all the approvals. What we're expecting is that we should be able to get all the approvals by October, and we should hit the ground. But if there's any delay by a month or two on the start date of the capex, then I think in the next con call I'll inform.
Okay, so broadly,
I would request you to please join back the queue for follow-up questions. Thank you. Participants, please press star and 1 to ask a question. We take the next question from the line of Janam Shah, an individual investor. Please go ahead.
Hi, sir. Thank you so much for this opportunity. I just wanted to ask that previously we had maintained around 4 to 5 years that it would take for a new competition to enter. But what we see is that Shree Cement, Ambuja, all have, come up with plans to enter into Northeast region. So do we still stand by that timeline?
I think broadly it should take about 3 to 4 years for someone to enter. I think that is still what the assumption I have in mind. And I think we'll just have to see in the coming quarters how things change if they do. So right now, I think that is the estimate that I have in my mind.
Okay, but so because we have to some extent extended our timelines for the projects that we had, so do you think that with all the things that are going on currently, companies would prefer entering into new regions where, the pricing is better, EBITDA per ton is better. So do you think that is a risk now for, new companies, mainland players to enter into the Northeast region?
Sorry, can you repeat that question?
So what I was saying is that with all the, West Asia disruptions that are happening right now, and we still, provide better EBITDA per ton in the market, do you think that the, the companies will try to, fast track their expansion into different regions, for example, Northeast?
They would just go with the pace which is practical on ground, and they would try to do their best. I don't think the West Asia crisis really pushes them to come to Northeast. And I think irrespective, the margin was good for them to try to come to Northeast. And I think Northeast as a market overall compared to the market that they are serving is relatively small. So I don't think that the overall numbers will change by entering Northeast that way.
Correct. And sir, the other question that I had is that we are planning to enter into North. So at what point do we start marketing our product? Because we would be quite a new brand there. So what would be the timeline for that? When do we add more dealers for that particular region?
I think we will start creating brand awareness. I think at least about 8-9 months before we actually start the commercial production. Right? I think any branding that we do before that may be a bit premature.
Understood. Thank you so much. Thank you for your question. Best of luck. Yeah.
Thank you.
Thank you. Participants, please press star and 1 to ask a question. We take the next question from the line of Amit Gupta from ICICI Securities. Please go ahead.
Good evening, sir. Am I audible?
Yes.
Sir, my first question is, what is our premium cement share for this quarter?
The premium cement share for this quarter was 15.1%.
Okay. And second question is, how has been the pricing trend in April and May as compared to the March exit? Has it improved, flat, or what has been the trend?
In Northeast it has improved slightly. In outside, also I think there is a 10 rupees improvement which has happened. But yeah, I think that's what has happened. Outside, basically West Bengal and Bihar.
Okay, so in Northeast and outside also 10 rupees per bag has been the increase.
In Northeast, I think it may be about 6 to 7 rupees. Outside Northeast was about 10 rupees.
Okay, sir. Thanks. These were my questions.
Thank you.
Thank you. Participants, please press star and 1 to ask a question. We take the next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Sir, just again to clarifying on the capex front. So can you clarify the capex? Right now we are envisaging for Rajasthan, Bihar, and Umrangso individually. And in terms of if we are planning to start by 1H FY29, how we will be individually and total will be spending in FY27, 28.
I don't have the individual breakups of, the capexes per project by year. What I can do is that in the investor presentation, I can attach a slide and, and probably there, I think you'll probably have a more comprehensive view of the capexes, different capexes of different projects by year. I think that chart we can give in like a week's time, and we can post it on this.
Yeah, got it. And second, Manoj sir, the cash as per you, because the non-current investment has increased. So what's the cash as per you? Gross debt we have as per the balance sheet, but cash. So and what
if you are talking about total 583 crore is the gross debt, total debt is there, and and the net debt is 200 crore or 200 crore. So there's 383 crore of that we have a cash in the form of bond or mutual fund. It is or fixed deposit with the bank.
So it is exact 300 odd crore or some
383 odd crore.
383 crore is a cash and cash equivalent.
Yeah, cash. Yeah, liquid. You can say the liquid asset.
Yeah. I got that thing. Second, sir, you mentioned that in Q1 and Q2, whatever the rack shortage and some increase, so we are looking at 10-15 paisa increase in the fuel cost. So this will be till Q2 also, or only just July, August, and then it will be coming back to the normalized level?
No, Tushar already told, because this is all because now we are whatever facing that auction prices have gone up. Now the rack availability is also an issue due to the scarcity in the power because they are supplying to the power plant. So how much impact will be there? We are just estimating that it will be 15-20 paise. But how the thing moves now, the fuel prices have also, diesel prices have gone up. So it is very difficult to predict right now what will be the impact, overall impact. We are just for base time we can estimate that currently it is 15-20 paise. How the thing will move, it is difficult to tell right now.
Okay, got it. And broadly in terms of EBITDA per ton, what we are normally looking 1,600 to 1,800 odd rupees, that we will be able to maintain till the time the Rajasthan will come, and then still we will be able to still have a 1,300, 1,400 kind of a EBITDA per ton.
I think in this, I think for the next 2-3 years till the time we get the Rajasthan project, I think the EBITDA, because it is only in Northeast sales, the EBITDA should be between 15 to 1,700, right, at least. And once we get the Rajasthan, of course, for the first 1 year, because we'll be absorbing fixed costs and because we'll be ramping up our sales, the EBITDA per ton may fall. But I think in the longer run, we should be able to maintain it at about 1,300, 1,400 blended. That is what we. Yeah, and of course, the absolute will be much more because the volume sales will be the overall volume growth will be much more in Rajasthan.
Got it. And sir, can you share the fuel mix for this FSA, AFR, biomass, port, and other contracts?
Yeah, for FSA this quarter it is 78.5% and biomass is 21.5%.
Okay. And the spot would be 3%?
Spot this quarter we have not done any any spot.
Okay. And sir, now in terms of the green share, how we want to increase the green share, and what's the current green share? So whatever, because Q2 presentation, after that there is no presentation. So 24.3 megawatt WHRS and 51 megawatt TPP, and that's the right now we have how we want to increase WHR solar and in terms of the green share, and what's the current green share?
So current green share last quarter it is around 33.8%. Okay, because WHR has generated more power than compared to the last quarter as well as last year. So it has in this quarter it was around 33.8%.
Okay, so how we want to look at for the full year FY27 this going up?
Maybe it can consider because the both kilns are running, so it will be may consider 30, somewhere 32, 33, whatever level we have seen.
Okay.
Yeah, because actually what we have done is that we have not necessarily right now invested in any other sources of green energy like wind and solar, though we had planned to, but we have not, because I think the rates in IEX for solar hours anyway are falling, right? So I don't think it makes more sense to kind of invest in non-core activities at the moment, and probably we are trying to have a group captive power agreement. I think in case we do end up signing one, which should be in this quarter, then we will inform you in the next quarter.
Yeah. And AAC block and other non-cement revenue for this quarter and for full year FY26, and how we want to look at FY27, and maybe the margin also, if you can specify.
So
this
I
quarter
think
we are there around 17 crore of this quarter in AAC block, and whole year is around 43 crore. And this year
we are targeting about 150 crores.
100 crore.
This includes AAC, RMC, and allied products. And I think the margin that we're looking at is about 7 to 8% to start with, and then gradually we like to expand on the margin. Right now we're trying to create a market first.
Okay, got it. And the QIP for Rajasthan that we will be the last time the stand, once the net debt EBITDA will be reaching 1.5, we'll go for a QIP.
Yeah, I think that decision we still not have taken at the board level. We have of course taken the permission for raising money in the board. I think in quarter 3 we did that, but we haven't planned it also because the markets were of course a bit weak as well, right? So I think whenever we do, we'll inform in advance, and then of course we'll do it.
Okay, got it. Thank you.
Thank you. Participants, please press star and 1 to ask a question. We take the next question from the line of Iqbal Singh from IFM Global. Please go ahead.
Hi, sir. Good afternoon. I just wanted to know, for your Rajasthan unit, which you are planning to, I think from the conversations that I've heard, to start from FY28-29. So when are you planning to break even on that capex and the operational costs? When will you break even on those capex, sir? This is the first question. Yeah, and the second one is, regarding your realizations per ton, are you foreseeing some kind of improvement going forward with the unit that will be set up in Gujarat? Because I believe that in Gujarat and western areas, the realization might be little higher in case you set up a plant there at that time.
So we are not thinking of Gujarat actually. I was saying Gujarat, not Gujarat actually.
Oh,
Gujarat is the place in Assam. Yeah.
In Assam, yes. Yeah. So just these two questions: the break even on the capex in Rajasthan unit, and the realizations scope of increase in realizations per ton.
I think, break even from an operating cost perspective or from an investment perspective, that is one thing which needs to be clarified. But I think what we are planning to do is that in 3.5 to 4 years' time, we want to run at 80-90% capacity utilization, right?
Okay.
And we would want to, of course, price a product in a way which is at a premium, right? So what we'd want is that the highest price seller, we would want to peg it at 5 to 10 rupees lower than that. That's why we want to operate. So I think what we'll have to do in the first initial few years is invest in the brand, right, and create a kind of a pull, which is a bit more natural than push. Right, and then maintain a price and take a 4.5, 3.5 year horizon to take a capacity to 80 to 85%. Right, and what we will also want to do is that we will, I think because the capacity that we initially launching is about 5 million compared to the size of the market, this is not. It is manageable, right? So what we'd like to do is create a dense distribution, focus on branding, and push for sales. Break even automatically will happen.
Okay, and the capacity for this unit will be how much, sir? For the Jorhat unit and Rajasthan unit?
Capacity for the Jharkhand unit and Rajasthan unit. The capacity for the clinker plant will be about 3.3 million tons in Rajasthan, along with like a 2 to 2.5 million ton grinding. Another grinding which will be supported by the clinker from Rajasthan will be in Haryana, which will be another 2 to 2.5. So that is your 5 million ton setup in north. And Rajasthan and Jharkhand, will be coming around the same time as Umrangshu, and that will be basically about 2 million tons.
2 million ton of clinker unit.
Grinding. Jharkhand has no limestone. It will be only grinding. Yes.
Okay.
Umrangshu has like clinker. Umrangshu has limestone, so you can produce clinker and Umrangshu.
Okay. Thank you.
Thank you. Participants, please press star and 1 to ask a question. We take the next question from the line of Harsh Mittal from Emkay Global Financial Services. Please go ahead.
Yeah. Thank you for the follow-up. Am I audible?
Yeah.
Yes. Sir, I wanted to understand the CC ratio for FY26.
It's about 66.6.
For the full year, sir. Full year FY26.
Sorry, for the full year. I don't have the data for full year, but I have it for quarter 3 as well. It was 67.5. So I'm assuming that the clinker factor would be between 66.6 to 67.5, I think, for the full year. But I think you can get in touch with us and I'll give you the full year data as well.
Sure. So the second question is, once we commission the Bihar grinding unit at Begusarai, we'll be, as you alluded to, the fact that you'll be shipping the clinker from the Meghalaya plant to Bihar. So what would be the incremental freight cost that would be bearing on that, and correspondingly the incentives what we wanted to accrue from the Bihar grinding unit, will it kind of offset that incremental cost, is what I wanted to understand.
Yeah, so right now, we are still catering Bihar market. We cater in the east side of it, right? And what we do is that we serve it from Siliguri. So I think like the freight, you cannot only look at the clinker freight and how much incremental clinker freight that you'll be paying. So it also has to be looked at from the cement freight, right? And how much of the cement freight we'll be able to save and the freight that we pay on fly ash, right? So I think it's a bit more complex than just the incremental freight that we'll be paying, and if it gets offset by the incremental subsidy, right? So I think, but yes, we have applied for our subsidies in Bihar. We should be getting the SGST benefit, and we have applied for it under the policy. And I think the benefit is up to about 150 to 200% of the investment that one makes. I think once we do get the confirmation of the benefit from the Bihar government, we will be sharing it with you in the next call. And I think with the subsidies and with optimized clinker transportation and fly ash sourcing, I think it can be a model which of course will not give you EBITDA of 1300, 1400. So it will help you utilize your capacity while also leading to entering new markets and creating your geographical footprint.
Sure, sir. Thank you. So these were my questions. Thank you.
Thank you. Participants, this is a final reminder, and no further reminders will be announced. To ask a question, press star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited for closing comments.
Yeah, thank you. I believe there are no further questions from participants. Tushar, I had a few questions. Firstly, on the war impact, the West Asia war crisis. So most of the companies that have been in India, what they have been talking about is about kind of a 400 rupees overall impact in terms of operating cost by end of H1 FY27. But as far as STARCEMENT is concerned, I believe the impact will be limited to packing cost, the diesel cost, and maybe the fuel cost may not be equally impacted because of our less dependence on imported fuel. and also we are safeguarded from the rupee depreciation. So from that perspective, what is your estimate of the broader cost impact which could be there in H1 for STARCEMENT per se in terms of the war?
I think there could be, about 250 to 300 rupees impact. I think mainly because of the packing bags and the fuel cost. Because for us, of course, we do not depend on imported fuel, coal or pet coke, but we do depend on our FSAs being supplied on time. And right now, because of the rate shortages, the FSAs are not available, and that is creating a crisis in terms of fuel sourcing. So I think because of that, we have to go for higher rates of, sources. And I think that is what is leading to a cost impact. So I think it should be a 250 to 300 rupees impact. So I think there have been a few, I think about 7 rupees increase in Northeast, about 10 rupees increase in North Bengal, basically to kind of partially, not fully, but partially nullify the impact which is coming in terms of the cost.
So is it fair to say that we are kind of 100 rupees better off versus the mainland peers in terms of cost escalation? Maybe 50 to 100 rupees better off because of our less dependence on import?
Yes, but I think it really depends because I don't know if other people have forecasted a further increase in the fuel prices or not, in the diesel prices or not, So it really depends on those assumptions and how the diesel prices behave, because I think Northeast is also quite heavily dependent on the fuel price, and the per PTPK in Northeast is a bit higher because of the hilly terrain, right? So the fuel cost really impacts us as well. So I think it really depends on how much does the diesel prices go up further, and of course if there's a significant increase in the diesel prices, then that will have to be absorbed, some by the market as well.
Okay. And Tushar, you just mentioned that we have partially passed on the cost push impact. So is it fair to say that Q1 we are kind of EBITDA dilutive on the cost because of the cost inflation? It's not neutralized yet?
Yeah, I think the Q1 there will be definitely a pressure of the EBITDA, right, on the EBITDA because of the cost. I think as we're going, I think April was quite heavy on the cost. I think May is turning out to be a bit better. So I think by June, I think it should normalize. But there will be a decent impact of whatever is going on the EBITDA per ton as well, and overall EBITDA as well.
But you stick on to guidance of 1,500 plus for Northeast operations per se, which you gave on the call, right?
Yeah, I think that was more from a year-long perspective.
Yeah,
I think
that's what I'm saying. That's what.
Yeah, I think year-long we should be able to average that. In Q1, we'll have to see.
Okay. And Tushar, my second question was that basically this is from a more of a kind of a long-term perspective. So recently, maybe a couple of more players, so in total, JK Lakshmi Cement, Shree Cement, and Ambuja Cements from mainland have now announced their entry to Northeast. So when we interact with our investors, etc., so we get a feedback that they have a notion that Northeast EBITDA per ton, per se, profitability per ton will dilute substantially once they enter into the market. I know that may not be the case because of the very high capex, and Northeast is a very difficult geography to operate. That is what I have kind of figured out. So what is your say in terms of once they, maybe 3 years down the line, it's a more of a long-term kind of a question, but maybe 3 years or 4 years down the line, once they come in, do you see EBITDA per ton or maybe profitability of Northeast getting impacted heavily, given first keeping in conjunction the high capex which they are spending in terms of their overall plans? So people have announced kind of upwards of $160, $170 capex per ton in Northeast. So how do you read the situation once they come into the Northeast markets from a long-term perspective?
See, in the long run, once they do come in, I think there will be a significant pressure in the market, right? Because everyone will be, running for the same capacity. Sorry, for the same market, and the market is relatively small, right? So even a 3 million ton plant in a big market makes a big impact. So I think people who then are coming in, they also need to then think, right? Because unlike North and unlike South, where they put up capacities without caring about their impact on the market, right? Everyone who comes into Northeast will have to think about their impact on the market and their own profitability. And why are they entering in Northeast in the first place, right? Because it has a charm of a higher margin, right? So, and what would be the point of entering and putting in all that effort, right, if you cannot enjoy that higher margin? Because volume they can get from outside also.
The question was that now they've already announced, so STARCEMENT has announced, JK Lakshmi has announced, Ambuja has announced. Obviously,
yeah, no, completely. So, I mean, I think once they will enter also, because the impact of their sales will not only impact the price decisions, will not only impact,
But my question was that, do you see that they will take such a price decision where it can impact you, because the kind of capex which they are spending, like $170-$180, kind of a capex on a initial capex?
Yeah, like I don't know. I honestly don't know. I think it depends player to player, because I think some players have a strategy to kind of, just cut and aggressively sell and not care about their price positioning compared to ours. And then there are other players which are much more sensitive to it, right? I do not see that they'll be significant, because I think there has to be rationality which everyone follows.
That's what I was trying to figure out.
So I don't think it should be that. Of course, there'll be pressure. There's more competition. There'll be some pressure on the price. I think it's something that probably may happen for a year or two, but then I think it should normalize, because everyone's there to earn, I guess, right?
And in terms of the trade penetration, will STARCEMENT be the highest in terms of all the Northeast players in terms of the trade market penetration?
Yeah, I think we sell like a majority of our sales is in trade only. And out of all the players, we have the highest penetration in trade by far, I mean, by a big margin. And I think that is something that we want to maintain, right? Because I think that's
and that will also help you safeguard the profitability, right?
Yeah, I think to an extent, because I think the trade market doesn't go by just flooding the market, right? I think it's much more nuanced than that.
And last question to Manoj sir. Manoj sir, do you have any kind of one-offs in the quarter in terms of donations, etc.? If you can just...
One-off is there, because last quarter is 5 CR was there. This year, this quarter is 10 CR. So 5 crore is the one, you can say.
And 10 crore is a donation to, or what is it? It's a donation.
Major donation.
Okay. So now these one-offs will stop, right, from Q1 onwards? There would not be any one-offs.
Yeah, one-off, because you can't foresee what will come. Okay.
Yeah. No. But in terms of donations, I'm asking.
Yeah, I think in quarter one there may be a few. But I think in quarter two you should not be expecting any significant ones.
Okay. Thanks a lot, Tushar, and thanks a lot, Manoj. There are no further questions from participants. On behalf of Philip Capital India Private Limited, I'd like to thank the manager of STARCEMENT for the call, and also many thanks to the participants joining the call. Thank you very much, sir, and I will now conclude the call. Thank you.
Thanks.
Thank you. On behalf of Philip Capital India Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.